Yo, guys, what's up? It is Thursday, October 9th. I decided to do it out here because I'm doing some renovation on my house and a lot of junk out on the patio where I used to do it. And why not? Go outside and do it. So the market was down today. Fiscal flows, folks, I went over the numbers again today, very strong. I don't see any impact, any negative impact whatsoever from the shutdown. We're up something like 41 billion already over last year, but some of that has been skewed a little bit to the high side because of a calendar issue. We had a Social Security payment yesterday, so year over year, it bumped it up, but that'll come down. But we're still up. Leading flows are still up over last year. Net flows are still up over last year. And so this pullback in stocks, I think it's going to be a good buying opportunity. I would maybe wait until next week with that tax strain is going to be like the trough, the bottom of this dip. And gold was down like $100 today. I think that's a buy. Silver too, because the flows are still strong. So I'm gonna tell you guys a little story. It relates to gold, and my perception of some of the people who get into gold, who like to buy gold. And I'm not trying to knock down anybody who's in gold. I used to be a gold trader. I was a member of the COMEX back in the 80s. And I stood in the gold and silver pits, and I knew a lot of the guys down there in New York. And so, I'm familiar with gold trading. The funny thing is, before I get into this story, I always tell you guys, like, my experience on the floor of, I was a member of 4 different exchanges, and my experience was always that we wanted to go short everything, with one exception, gold. For some reason, like when I traded S&Ps in Chicago, and it wasn't just me, like I told you this story, like everybody in the pit, with the exception of like one guy that I could remember, who was the biggest trader in there. He was always on the buy side, but we were always selling. And that was the same thing when I was in oil. It was the same thing when I was on the New York Futures Exchange with New York Stock Index. We always tried to sell except for one market, which was gold. And I was doing that in the 80s, the late 80s, when every single rally in gold was eventually it just fizzled out. So for some reason, I was on the wrong side of all these other markets. Well, oil bounced around, but I was definitely on the wrong side of the S&P perpetually when I was a floor trader. And I was on the wrong side of gold back in the 80s when I was buying every time it looked like it was breaking out on the charts, or when I was down in the pit and a rally would get going, I would buy into it and it would always fizzle out. All right, let me tell you my story about this is going to piss some of you people off. And again, I got the sun glare. I'm not intending to piss you off, but I think, I don't know, I like telling these stories. So you may recall last month, I went out to Montana with my son. We went out there camping and hiking. And we were in Glacier National Park, and one day we're doing a hike up this mountain. And the mountain was really steep. It wasn't a long hike. It was 3.5 miles, 3.2 miles, but it was a 3,500 foot elevation gain. I hike slow, okay? I'm 68, and I just hike slow. My son, he's 25. He's in great shape. He's a Muay Thai fighter, so he was always way ahead of me, and he would always have to wait for me to catch up, because I hike slow. And there was this old lady when I was hiking. She was a ways ahead of me on the trail, maybe a couple of 100 yards ahead of me, and she was hiking up the mountain too. And she had some hiking poles. And eventually I caught up with her, and my son was already way ahead. And like we hit it off. Me and this old lady hit it off, and we figured, well, we'll just walk together, because basically it was the same pace. She was going slow and I was going slow. So we're hiking up and we're talking about different things, and we're kind of bonding there as hiking buddies. And then we finally reached the top of the mountain. I think it was like just under 9,000 feet. We finally reached the top of the mountain, and we're sitting there to take a rest. And then we started to talk about these mountains. And I said, yeah, they must be like, I know the mountains in the east are like over 100 million years old, like the Appalachians, And she's like, no, they're 6,000 years old. And at first it threw me back. I'm like, 6,000 years old, mountain range. And then all of a sudden it hit me. She's one of these like religious Bible nuts, okay? And she thinks like the earth is 6,000 years old or 5,000. She said 6,000. They're only 6,000 years old, these mountains. And I'm like, okay, all right. I didn't even want to get into it, right? And I'm like, oh, she's one of these, a biblical view of everything, that the earth, is 6,000 years old. And sure enough, as we started hiking down, and I'm thinking to myself, what kind of wacky stuff am I going to hear next? And out of her mouth comes, I only invest in gold because everything's going to crash. The stock market's going to crash. The economy's going to crash. We're going to go into a deep, deep recession. I only invest in gold. And then, like, everything made sense to me. With the 6,000 years the earth has been around, and she's only invested in gold. Now, again, I started this thing. I don't want to offend anybody or make you feel like I'm dumping on you. I mean, there are valid reasons to own gold. And you could even, if you know how to use the gold market, you could extract like a T-bill interest rate of return by doing spreads. Okay, so a lot of times people say, well, gold doesn't pay you anything. Stocks pay dividends. Stocks compound because the interest is earned. And gold is really like, the greater fool theory. Like, you buy it, but somebody else has to buy it at a higher price. And that just has to keep perpetuating for it to go up. Because every ounce of gold ever mined since the history of the earth is around. I mean, it's not like oil. You don't burn it up and it doesn't disappear. We still have it. But if you're sophisticated, there is a way that you could earn like a T-bill rate of interest out of gold by doing the spreads. I mean, there were guys I remember on the COMEX who that's all they did was play the spread in very, very large numbers. Like they would have 1,000 contracts or 600-700 contracts on each side, which back then, that was huge back then. We're talking about the 80s, okay? So I'm not trying to dump on anyone, but a lot of the gold interest, especially on the part of individual investors, comes from people like these ladies. This lady that I'm talking about. These, apocalyptic, Armageddon is coming. We need to be in gold. There's no financial or economic sophistication behind it. It's just an idea or a theme that has been pumped into them, ever since they were probably little kids. And it still happens. I mean, you see these commercials like on Fox News and stuff like that. They're all about gold and protecting your value. I mean, I explained, or I went over the increase in the S&P. It was like, and the increase in gold, I forget what period I went back to, but I think I went back to 1971 when Nixon took us off the international gold standard. And the difference is enormous with stocks compared to gold. So even though I traded gold and I was a member of the COMEX, I stick with stocks because I earn dividends. That pays me. I have an income stream from stocks. All right, which is nice because I'm older now. I'm 68. Social Security doesn't do it, enough. So I have an income stream from stocks. And here's the other thing. You get people, I see people in the comments, again, with this kind of apocalyptic view of everything. Like the market's going to crash. One day it's going to happen. It's going to crash. Like there's going to be a finale. And what you don't understand about the stock market, in its very basic sense, it's a growth function. That's all it is. If you plot a growth function on a spreadsheet or whatever, it just goes like this, and then it just keeps going up, going up, going up. And the reason why that is because it reflects the growth in the economy. It reflects the growth in population. It reflects the growth in society. And as long as there is, as long as we have here on Earth the resources to continue, and I'm talking about real resources like actual physical assets like water, clean air, clean environment, food, shelter, this kind of stuff. Peace. We're going to grow, and there's going to be firms, and they're going to earn profits, and those profits are going to be reflected in the stock market. Themes may change over time. Like if you go back to the 60s or the 70s, you had certain industries that were dominant. And then, of course, in the 90s with the internet, you had that. And now with the AI, so different themes emerge, but you could even look at some of these, older companies that we would call just kind of boring in a way, like Coca-Cola. I think like Warren Buffett made most of his money on stocks like this, Coca-Cola, which just see continual growth, continual earnings performance, dividends being paid, that all accrues, that all adds up. That's a growth function. So this idea that suddenly one day everything is going to hit a wall, I'm not saying that possibly can't happen in 50 or 100 years, that the earth runs out of resources, but human beings are pretty damn resourceful. I mean, Elon Musk once floated the idea of mining asteroids. In one asteroid, you would find so much gold that the price would literally drop to zero here on Earth. I mean, you would find, I forget even what the figure was, what the number was, but we're talking like in the billions of ounces or something like that of gold, tons. So like human beings are pretty resourceful. So I wouldn't start saying, we're going to hit a wall and that's the end and it's over, unless, if you're biblical, like this lady was, you might talk like that. You might think like that. I mean, you're allowed to. You're allowed to think whatever you want. It's a free country. Your brain is for you. You're not going to catch me thinking like that. I'm a pragmatic guy. I go with science, stuff like that. So do I trade gold? I trade gold when I see opportunity, when it's cheap and I think like nobody is in it. I'm in stocks. But I'll repeat what I said at the beginning of this. I'll just bring it right back down to a micro level. The flows are still strong. So as long as that's the case, I think this dip today, you got to buy it. And by the way, getting back to what I was talking about yesterday, not that one day proves anything, because one day doesn't prove anything, but stocks were down today and gold was down today. So getting back to this idea that there's an inverse correlation, I just don't buy it, all right? Because my eyes don't deceive me. I could see what's going on. I saw what's going on today. There was no hedge against the stock market sell-off today, and that was a minuscule, tiny little sell-off. Believe me, if we had a 1987 style crash today with the S&P down, 1,500 points, believe me, you would see gold down I don't know, $500-600 easy, maybe more. So yeah, again, I'm not trying to dump on anybody who has gold in their portfolio. Hey, you've done great. I'm happy for you. Good for you. I want you to continue doing good. All right? But just a little story. Anyway, thank you for watching. Please like the video and subscribe. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. I put these numbers out every day. They're broken down in the emails that I send out, the actual numbers. And as long as what I'm seeing remains the case, you know, it's bullish. I think I mentioned, or if I didn't, I will repeat it, that next week, the 15th, is a tax drain. So I wouldn't be surprised to see the market down into mid next week, but that would be a great buying opportunity, a great buying opportunity. All right, see you tomorrow. Bye.